Hi everyone, welcome to Exact DNA podcast. As you know, we rebranded it because now we are moving into just one umbrella brand, I would say, which is like a community, a podcast, and also a product for we're building an executive intelligence platform. Today we are here with Alessandro Hatami. He has more than 25 years in banking and fintech leadership, founder of Pacemakers, former executive at PayPal Europe, Lloyds Banking Group, GE Capital, and PayPoint. Nearly a decade serving as an FCA-regulated non-executive director, plus as a non-executive director in other companies. He also is a co-author of Reinventing Banking and Inclusive Finance. So we're going to have different conversations today with him. We're going to talk about banking, about fintech, about AI, and also about his transition, from being an executive into a non-executive director, and how he has been working as a NED in the different industries and also globally. Welcome, Alessandro. I hope that the intro fits like your profile, which is like very senior with a lot of experience.
Very good, Mario. I enjoyed it. A bit embarrassing how much stuff you said about me, but yes, that is all accurate.
Well, we always try to say the key characteristics of every single I would say guest, because like audience can understand with who they are, who is in front of them, right? But to start the conversation, you have worked inside of the world, one of the world's largest financial institutions, right, around the globe, including PayPal, Lloyds Banking, as I mentioned, GE Capital. And looking back to your experience, what has fundamentally changed about banking over the last 25 years?
Good question. I'd say everything and nothing at the same time. So the purpose of banking remains always that of helping customers deliver on their objectives and their needs, helping them achieve what they want to do. But the means of delivering this has changed dramatically. So the focus is still on the customer outcome, regulation to a certain extent, so good outcome for the customer. The way we deliver it has gone away, is moved dramatically from first an interaction between humans to an interaction with humans supported by technology. And with the first digital revolution, the internet, it became that it wasn't going to be face-to-face anymore, where it was still human to human, if you want. And now slowly with the introduction of AI, we are seeing the third entity participating in the conversation that supports and complements both. So we have gone through one big transformation, which was the digital introduction, the internet, and now we're going through the second one, which is AI.
And during the last, as you mentioned, digital transformation, right? Why so many companies struggle to innovate at the pace of fintech startups, for example?
Yeah, I think the challenge is what we know as the innovator's dilemma. I think if you, as a business, if you are able to generate revenue for very long periods of time and doing things in a certain way, adopting a different way, or a way that is transformational for the way you operate, it's a risk that you don't want to take. So what happens is that we see organizations being slightly reluctant to adopt the new because they're so profitable, so effective, so efficient in the old ways. And they still have a difficulty in adapting to something that could potentially be erosive of the way they operate. That said, what that leads to is the innovation dilemma curve, as you know, is that at some point you are not as profitable as you used to be, but you don't have an alternative and you haven't invested in that alternative. Somebody comes and replaces you. Now, what we thought this was going to happen to the financial services space, and we thought the fintechs were going to come in and overtake that. But the established and incumbent financial institutions have been a lot more resilient than one thought. So they are adapting, and they are, instead of trying to fight innovation and trying to destroy it, and some of the other industry tried, they are engaging and collaborating and interacting together. Now they're both maintaining, the innovators and the incumbent are maintaining their set differentness, but they are working more collaboratively than many other industries in the past that went through transformation like this.
Well, I'm not from the finance industry, but I've been talking with a lot of friends and people in the podcast from the fintechs, segment, I would say. Mm-hmm. And And the UK is the strongest market in fintech. How do you see, because the fintech, they are like applying a lot of tech, everything is digital, they don't have branches in everywhere, and the business model is different.
Mm-hmm.
How do you see that the traditional banks are moving or adapting to compete with the fintechs? Because the fintechs have taken a very big part of the market, right?
Yeah.
That they were not used to that. So how do you see that's happening,
Well,
and how the banks are changing?
Think of it this way. The customer has a big role to play in the financial services space. And one of the things that we have as individuals is we need to trust the third party that we're working with. And what's happening is the incumbent or the established banks, they have an advantage over some of the challengers because they are trusted more. So I'm willing to accept a lower quality of service from an incumbent bank because they've been around for 150 years. Okay. While I see that the challenger is doing better than quality-wise in what the services they provide, I still stick to that. So if you look at all the Revolut customers, the vast majority have not closed their traditional bank account. Okay. Now, what Revolut is doing, which is a very smart move, is slowly enticing them out with services, with propositions, with products. It's not forcing them to abandon the past, but it's creating them a need, a desire to kind of move into a new platform. That said, I don't know of anybody that has shut down, has closed their Lloyds Bank or Barclays account to only have Revolut. And that is due to a variety of things, including the range of services, including, as I said, the reputation and the fact that you feel that they are, in case something goes wrong, you are more protected with the incumbent and so on. So what we're having is that the market actually has increased. So there's more active bank accounts right now than they were 20 years ago or 10 years ago. And it's not just because of demographic change, it's also because people are having more than one. So if I look at my own Apple Wallet, I have 15 accounts. It's because I'm interested in opening and looking how the banks operate. But so I have Santander, Barclays, and Lloyds, but I also have Wise, and I have Revolut, and I have all the others too. And I find myself that I use them in a very, very kind of pragmatic way. So I use the ones that I need for the right thing at the right time. So people are becoming a bit more aware about the financial service. They become more aware of the services that they're provided. But at the same time, they're sticking with the old guys. So the old guys are aware of that. So they have this advantage, if you want. But they are also aware that change is coming and they have to be ready for it. Because as we said in the whole discussion, change, it comes initially slowly, but then incredibly fast. So if you're not ready, you get overtaken. That's one big challenge.
I was like smiling because I wanted to ask you actually let's talk about Revolut and tell me what you see there. And it's, but you went into like a behavior, like a psychological pattern, across people, which is very, very relevant because it's true. I haven't closed my Santander account. I have Starlink, I have Revolut, I have Wise, and I use it for different things. Like for example, Santander is personal, right? And Wise is for the business. Starlink is personal as well. So when I want to transfer money internationally, I use Starlink, but I don't use Santander because it's too expensive. Right? Or if I go abroad, I use certain, credit cards which are like cheaper than Amex or like, so I'm like, using different services depending on the,
You're probably not the average customer, Mario. I think you're more complicated and more sophisticated in some of the approach. But I think what's interesting is that most people now have more than one account. And I can see my daughters who are in their 20s and they already have two, okay? They have their Revolut cards and they have their Lloyds Bank.
Okay. I think one of the reasons is, this is my personal opinion, without knowledge, this is not my sector. But I think if Revolut, for example, would start giving loans and having credit, like more powerful credit cards, and also encouraging people to deposit their salary in the Revolut account, there's going to be a moment that they will say, we have everything here, Santander anymore. But we still have the tradition of receiving our salary, for example, for employees in the traditional bank, right? Yeah. And not the other way around. And then we move money from one account, Santander, for example, or Lloyds or whatever, to this, the Revolut, the Starlink, whatever, because you have a better, analytics of how you spend your money and other services. So it's very. Yeah.
So if you asked me 5-6 years ago, I would say that eventually will come, that the incumbent will be overtaken by the challengers. Now, today, I'm not 100% sure, okay? And I think it's not because people are lazy or because something terrible happens, etc. It's because the incumbent are moving, okay? Incumbent are rethinking or changing, etc. Also because one of the reasons why innovation takes time is that the benefit of innovation sometimes there's a lag between when you do it and actually when the product is achieved. And if you're thinking yourself, if you're a leader or if you're an executive person in a big bank, you're saying, okay, so I'll make this investment in this transformational thing, which potentially impacts my business negatively in the short term, but then in a 2 years time, 3 years time, this product will become bigger than what I have right now. But they're also thinking in 2 years time, I will not be in this job, okay? So I'm investing my own bonus this year, accepting lower returns, because I am planning to create a benefit for somebody else who's going to replace me going forward. So that was a reluctance from incumbent from the persons, professionals in the incumbent to do the change because of that. What's happening right now is the benefit is coming quicker. Okay, so I launch a new product and you see it very quickly. It doesn't take 2-3 years to implement. You get the returns right away. So people moving away from branches into the mobile, the benefit is tangible right away. Unfortunately, if you're responsible for running branches, it becomes, you become redundant. But the P&L holder for the bank says, wow, getting a lot more interaction with my customers, I'm getting more products going through and my profitability, provided the economy works, is improving, okay? So I think what's happening right now is that the incumbents are suddenly saying, maybe digital transformation actually is good for my short-term profit, short-term benefit, and therefore is something that as an executive, I should consider more proactively than I would have done in the past. I don't know if that makes sense, but...
No, it makes sense. It makes sense. Yes, I was thinking, but yeah, we've been talking about this for 13 minutes, and I want to touch on another topic. You founded Pacemakers, right? And
I did.
To help organizations to innovate through partnerships and acquisitions. Where is the problem that is in the market?
One of the things I had, about 10 years ago, I left Lloyds, and I decided that I didn't want to go back to a big corporate. So I decided to create my own company, which is Pacemakers. And the reason I did that is because I felt that there was a need for something that Pacemakers does. So, as I mentioned, corporates are aware that they need to transform, they need to change. They're also aware that implementing direct technology directly is not as effective, as efficient as what they say. So, when businesses transform, they go through 3 stages, okay? I call them adapt, evolve, and transform. So the adapt is I do what I'm doing every day in my current operations, and then I use the internet to help me do it better. So the first mobile apps that you saw, they were giving you exactly the same services that you had in branch on your phone. Okay, so it was a transfer from one device to the other, but it was still the same interaction. Then what happens is that they start to evolve. So they say, okay, now I have this device, I'm talking to the customer on the mobile phone, the customer doesn't have to come to the branch. Can I communicate with them differently? Can I send them some products? Should I show them an update of how they're spending their money while they're on the phone? Okay, which is an evolution, but it's still the same thing. So you could have gotten that information if you went to the branch and asked for a download of all your data. So they say, this is how you're spending. So they say, okay, can we slightly evolve on the position? And then they get to this wall and say, okay, how do I transform? And the transformational thing requires too much of a deep rethinking of the business, and then they will have a hard time doing it on themselves. So most banks or large organizations will say, okay, so let me find a third party that can come in and help me do this new transformational dimension that I need to do. And why do I need to do that? Is because my customers have changed, my employees have changed, the ecosystem has changed, the technology has changed, all these things are coming together, but I don't necessarily have the insights internally to do that. And I cannot necessarily work for some big consulting firm that comes in and does the work for me. By the time that they're done, it's 2 years from today, and we will have a solution for 2 years ago. Okay? So how do I make the transformation that I need to do? And so partnering is the way forward. Okay? So a lot of these large corporate banks are partnering with the incumbent, with the challengers, with tech firms, and so on and so forth. But they're doing it, I thought, in a way that wasn't very efficient and very professional. So you would choose to work with a partner. You use your procurement people, and they would go out and say, okay, so who's really good at doing digital ID? And you would find these 3 companies, and the research would have been done that, and they would make a list, and then, or they would go to a conference and somebody presents something on digital ID. So, my God, this company's perfect. We should use them, and so on and so forth. So the approach that they will use is something that is very, I don't say unprofessional, but it's kind of ad hoc. Okay. So I said, why don't we create a business that is like an executive search firm? Okay. So when the client says, I want to deliver this new capability, they come to us, we map them all the market of who all the players that are relevant to what they're doing. So at one extreme, they may be the multinational based, so IBM, let's say, and they don't want to acquire or partner with them. And the other extreme is an Indian startup with 4 employees that doesn't have the track record. But in this list of 30 companies, there's 5 in the middle that are just right for them. And what we do is we told them, this is all the players in the space. So you have a complete whole of market perspective of what needs to be done. We think that these are the 5 that are right for you. And we think that because we've spoken to you, understand how you operate and so on. And then they make a decision of who they want to speak to, and we hold their hand throughout. Now, you'll find that this is very similar to a headhunter. Okay. So a headhunter comes and comes to the business, goes to a headhunter and says, okay, I'm looking for a new CFO. The first thing that the headhunter thinks about is, who are you? Are you a bank, a retailer, a transport organization, whatever? What is that you're doing? Once they do that, they then go out and find all possible candidates that have that capability, but they don't do it going on LinkedIn only. Okay. They also do it on reputation. They do it on experience. They do it on all of that. So they create a long list of potential targets, and then they interview these, and they come to a short list of who are the rights for them, and then they present it to the client. But the client gets a vision of the whole list. Okay. And if they want to bring somebody from the extremes back into, they can do that too. And we do the same thing at Pacemakers, and it's working really well. So it's always good for banks. We go in and we are injecting ourselves for a few weeks with the clients. We help them understand, understand the market, understand who the players are, and then we connect it to them. And it's been working for 10 years.
10 years. Wow. It's a long time, huh? That was 2016.
Yeah, actually it's 11 years.
11 years, yeah. Congratulations, Alessandro.
Gracias.
I like it because you're applying, your knowledge that you learned throughout your experience, to build a new business and transfer.
No, and it's fascinating because this forces me to do is to work with the incumbent to understand how they do it, and that's my DNA, if you want. But then I'm talking to all these new companies, and you learn about how the industry is changing, and it's super exciting. So. Financial service is always seen as kind of a boring thing. And when I tell my kids what I do, they yawn at me. But I find it quite fascinating because ultimately it powers everything that we do. So my kids, yes, are bored by financial services, but then they need the debit card to pay for the travel. They need to know where to go.
But probably people think that numbers is very boring, right? But the financial services is actually very interesting. Now we were talking about AI, innovation, and everything. So there's so much to do in terms of innovation that actually I find it a very exciting sector. I don't have experience in that sector. Yeah. But I see it that it's very cool what Revolut and all these companies are doing. I have a friend. He just raised $2.5 million store. That's to save money with via perks. So totally different business model. And he said, I want to build something. I want to have a very boring idea and making it very interesting. And I was laughing so much. And we had a celebration 2 weeks ago, I think, about, closing round. And it's in the Fintech. It's just, using your savings instead of getting money, via interest, is just getting perks. So you should change it for something valuable right now.
Well, it sounds like a good opportunity, like a gold mine. So it's good.
Yeah. Stoa is the name. So moving a little bit more into the board governance and NED questions, because you've been, as an executive, and also now you are non-executive director, and you serve as an FCA regulated non-executive director for nearly a decade, right?
Yeah.
What are the biggest challenges that boards face as AI becomes embedded in financial services?
Yeah, I think the challenges are many. On the AI perspective, from the financial services perspective, AI opens a lot of trapdoors that you're not familiar with. So using AI in the wrong way can deliver negative outcomes. And because AI is still, I don't want to say being tested, but still is, the boundaries are not known. If you saw the ChatGPT hacking system, the story today that they tasked one of their devices to do something, and this thing decided that the best way to do it was to hack another AI model. It makes me think, okay, how come they're telling us this? And has other things happened also that they're not telling us? And this is just the one that is least scary. But anyway, so AI is an incredibly powerful tool. I use it all the time. I think it's a very important element for financial services provision. But at the same time, as this, if you hear what the ChatGPT people are saying, what the news are saying about this thing, is that we don't have enough legal framework around this to be able to use it in a way that is, I don't say risk-free, but not too damaging, okay? And what happens is that regulation can never come before evolution, okay? So there's no, you couldn't regulate how cars were driving in the streets before you actually had a car, and this car run a few people over and had a few accidents, okay? So the concept of speed limit, the concept of driving on the right and the left, all these fun things were, if you want, created after the car was there and after the limits were there. So right now AI is there. The financial services and AI regulation is still not ready. And what it will do in the short term, it will overregulate, it will underregulate, and we'll have a kind of a pendulum that swings until you get something that is better. And regulation is never exactly right. You never get exactly right. Even in the roads, in the speed, in the driving thing, I don't think that driving regulation is perfect. If you live in London and you have to go 20 miles an hour in the center of town, you kind of say, okay, I can understand the security dimension, but couldn't you do something better than this? Can you do it more intelligently? But let's not go there. So regulation is something that evolves together with the evolution of the product. And it's always slightly behind, okay, from what the product can do. But at the same time, regulation is something that bites really hard, okay? So if you're in the financial services space and you espouse AI and this AI thing does something terrible, I think you are, or even bad, not just terrible, you are liable as a board member. If AI does something that leads to lack of resilience in your organization and your system is not working, a few years ago, it was the CTO's problem. Now it's the board's problem, okay, because regulation has changed. So all of these cool things about how the board is regulated and the implications, direct implications for bad decisions, for technology decisions, or even operational stuff, is now responsibility of the boards. So what we're seeing right now is a lot of AI implementation is actually low risk implementation, okay? So they're not taking the most out of what AI can do. There's a lot of AI washing also happening right now. So pretend, I have to fire 200,000 people. The American banks announced that they're firing 200,000 people in the next few months. All about AI. In reality, is because you overhired and now you're blaming AI because it makes you not look so bad if you've done that. That said, we'll get to a point where AI can be truly transformational, and some will try to implement it. There will be things going wrong. So I think what we'll see is an increased implementation of AI, an extension of AI's role in a variety of organizations, and we're going to see boards increasingly worried about what can happen. And boards increasingly will put some barriers to innovation unless they are somehow made feel comfortable about this. And I'm not sure what the answer is. So we can discuss some hypotheses of what can happen. But I think interestingly, board governance potentially will become one of the challengers of AI implementation in an organization.
And well, you said a lot of things, right? You said a lot of things.
I have ADHD, so I think about multiple things at the same time. So,
you said a lot of things, But no, but I get your point that, the regulation cannot stop innovation, because in the end, the innovation has to happen first, right? It doesn't happen with, we were talking about the fintech, right? The fintech started, and then the regulation started to adapt.
But regulation can kick the innovation in the ass very badly. So the first car that was implemented in the UK, the regulation said that you have to have a man with a red flag to walk in front of your car. Okay, that wasn't very good for the use of the car.
Yeah.
Okay. So regulation can create things. Now, regulation and innovation, they work hand in hand and they collaborate, because ultimately they both have the same thing in mind, which is the benefit of the public. Okay, the regulation wants it because they are controlling and they want to minimize the risk. The provider wants to serve its clients, because when they serve them and they're successful, they become more financially successful. They make more money. So both of them, the intention is to deliver something positive to the customer, to the end user. But regulation says, don't damage them. And the provider says, I want to sell as much as I can. So similar, but not identical.
Alessandro, when you started to work as a non-executive director, do you realize how was the role, like coming back to the basis? Where do you see that people generally don't understand about to be a non-executive director? What misunderstood?
Yeah. So I think the biggest thing is that if you're an exec and you become an NED, it's very hard to make that transition between an executive and as a non-executive. And that idea of, you don't tell people what to do, but you ask them why they've done something. Okay. So your job is not to say, okay, that marketing campaign is wrong, or that your risk policies are not the ones that I wouldn't do that, etc. You can't say that. You can actually ask questions. How did you get to that place? What were the things? What were the considerations, etc. So the communications and the way you engage with the organization is very, very different as a non-exec than it is for an executive. And I think that is the first learning, is that you don't have the power, or you should not have the power, because you're not there to lead, you're there to ask, if you see what I'm saying. And I think that's the biggest...
Which is the line between challenging the CEO and supporting them? Because there is a gray area there, right?
I think that there isn't. I think the challenging of there's an element of this is excellent, there's an element of this is terrible, and then there's a good enough element in the middle. Okay, so I think what you want to do is to make sure that you're always in the good enough space. Okay, if the executive goes into what you consider a bad place, okay, you have to be very vocal about it. Okay, you have no power as non-exec. You cannot say you're fired, CEO. Okay, you can do it as all of you together, but you can't do it as an individual. So what you need to do is you need to understand. You need to challenge and explain, because the executive also want to do the right thing. So the executives really want your input and your contribution to help them what to do, but you're not in control. Okay, you are there to create a series of questions, put together a series of queries that allow the executives to maybe rethink what they're doing. It allows the executive team to understand, the CEO to understand if they're doing the right thing, etc. And also the fact that you leave a paper trail because all these notes are taken, etc., is a fundamental thing, because it says that the process has been followed, and that is actually has more power than one thinks. So the fact that there are notes taken at board meetings is not an irrelevant thing. I think it's an important element for you to have. So you're there it's almost like like a checker, finding errors, asking motivations, understanding how things are going. And it's different than executive.
What characteristics make a CEO easy or difficult to work with from a board perspective?
Well, you have a lot of tough questions. I think if the CEO feels that the board is an annoyance and is something that is a hindrance for what he wants to do, it becomes a very hostile or passive hostile environment. And I think that's a negative thing. The CEO has to believe that the board is there to help her and help her put together the right choices and the decisions that need to be made. The relationship between executive, including the CEO and the board, has to be one of trust, but also has to be a perspective that both sides want the same thing, which is a good outcome for the business, a good outcome for the customer.
And what separates a high performance board from what that simple meets every quarter?
Asking lots of questions. I think understanding how the business operates and being involved. And when they see situations that are opaque or not clear, to raise their voice. If you suddenly see that every board meeting you get given 600 pages of stuff that is very repetitive, et cetera, you understand that there's something is not right. There's a discussion that is had there. And is the collaboration and support that the two can give to each other, I think, is the fundamental thing. So a good, well-operating board is one where the board meeting is not seen as you said, as an exercise that I do every month, but is an opportunity to exchange thoughts and ideas and to share their perspectives, which is the value of the NED. That's why you want an NED that knows about your business.
Yeah, it's also, as you mentioned, it's about relationship, collaboration, and I was talking, with Kelly about this as well, and she said that I wouldn't join a board that doesn't know me before the first conversation. Then, because and I said it's very similar when you are doing you're founding your team for your startup, right? You shouldn't bring someone that you know that you are not in terms of energy, principle, values, dynamics.
Yeah.
Let
me challenge you that to a little bit on that, okay? You want to bring a board that is not exactly a photocopy of the exec team, okay? So at the same time, you want to make sure that you're able to communicate, but you don't want to create a replica of the exec team into the board. So you want to have a board that is knowledgeable about the industry you operate in, but not necessarily identical to you. And I think I was
talking about the board, not the board and executives.
Okay.
When you bring someone in the board.
Okay, so I would say that the same for the board. So I think you don't want a board that everybody's the same, that everybody's you don't want to be a board of a bank and everybody's an ex-banker. Okay, you want a few people that are different. You don't want to have a fintech board and everybody's an ex-fintech person. Okay, so you because complexity comes not from the type of business, but comes from the market, comes from innovation, comes from regulation, all this type of stuff. That's where the challenges come. And you want people that are as broad as possible on that. So, for example, you see some of these fintechs, they were hiring entirely people that were ex-VCs or they had done startups and so on and so forth. And they realized that in becoming regulated and that they needed to have some ex-bankers. So if you look at the boards of a lot of the big fintechs, the successful ones, there's a lot of kind of incumbent people in them. Okay, and
I agree with that. With experience, has to be broad.
Yeah. Okay,
and the coming back a little bit on the AI, because it's becoming, as you mentioned, as a board topic, right? Level. Yeah. Which are the key questions that the board is asking right now? I don't know if you had the chance to be in some of them where people start like asking a few questions about AI to the C-suites, right? To understand.
There's obviously many questions that they ask, but the fundamental one is what can go wrong. Yeah, what can go wrong is a very important question right now. And boards, the traditional financial services boards, as we know, they're very heavily regulated by the financial regulators, but also other regulators of that. So understanding what can go wrong is a fundamental element of that. So you want to have a risk and reward thing. So what can go wrong and why you're doing it. The why you're doing it has to have a benefit, says it's good for the customer, it makes us more profitable, makes us more effective, efficient, allows us to expand our range. All these type of interesting things are important, but at the same time, I want to know what could go wrong. So that ability to do that. And what happens is that the answer to what could go wrong is something that is often quite complex. Okay?
To understand.
So oftentimes what the boards do, as soon as they hear something could go wrong, they say, okay, stop. Okay? So you shouldn't be doing this. So why are you doing this? And they call these challenges that potentially slow down the evolution of that. So I think one thing that is important for boards today is to make sure that they have the basics of understanding what AI can do the basics of understanding what makes AI successful for this business, and also the basics of understanding what could go wrong. So they are asking, not the question is what can go wrong, but what have you done about ensuring this, and that, very specific, much more specific perspective. They have become board members in that specific organization because they are able to ask detailed questions of how the business operates. And if AI is part of the business, then they have to understand AI. So one thing that I would challenge right now, a lot of the boards, is make sure that you have a basic AI training on understanding what that does. And there's a lot of good programs out there that are worth investing some time and effort to understand more. Once you go in with that background, it becomes a lot easier to ask the right question. And the dialogue becomes no longer a kind of a black and white, this is terrible, this is perfect, but there's a whole degree of the good enough in the middle that's where you want to be able to understand. And to be able to operate in that sector, the non-polarizing sector, you need to understand the business and need to understand AI.
Now that was a very good approach to pragmatic, right? To get the background, to get the knowledge, and then to mitigate the risk, right? I didn't think about that actually in the course. I mean, for people in the board, but they're absolutely right. A lot of people are very senior as well. That are not very.
But there's a lot of programs out there that even senior people can really take and enjoy. Some of the big schools are doing some really interesting programs, etc.
Yeah, no, I'm saying that this is gonna become a
but also think about it from a board perspective, right? So as a board, for example, when you see the financial documentation that are presented at the board, you know that this was put together by an accounting firm. And this accounting firm is a regulated accounting firm. There's a downside in doing your books and making a mistake. As people who did the accounting of Wirecard can testify, okay? See, the accounting firm gets into trouble. There isn't an equivalent on the AI and technical implementation. So if you can go to a big accounting firm or technology firm and saying, audit the way we do AI, and they can come back with a report. And you can say, okay, I'll take this at face value. But if it still goes wrong, okay, they are not liable. There is no financial liability to giving you a wrong. They just say, oh, sorry, we made a mistake. But you as the board, you're still responsible. Okay, so you can say, well, we brought this external consultants, etc. They gave us this, and that. And we say, well, you chose the wrong consultant, didn't you? So you're still liable. Okay, so I think that dimension requires a bit of knowledge about this new thing, much more deeply than it did for other innovations.
Alessandro, to finish the episode, we're heading to the end. Which is like the toughest board decision you have ever made, or you've been involved with, as a lesson learned for the audience to close the episode?
Yeah, well, I was the chair of Remuneration Committee and Nominations Committee. Okay, so having a conversation with the CEO at why the compensation that he or she were asking for was not exactly aligned was not an easy one. So I think that it's probably the toughest board is that one, because the other ones are complicated, risk, finance, etc. are complicated, but remuneration and nomination, it's the toughest one. And I have so many scars on my back to show you on how painful that can be. But as a board member, I think you're the whisperer to the board, to the executives. You're there as you don't tell them what to do, but you definitely ask them questions that makes them understand that maybe they should be doing something differently. And unless you see something illegal, profoundly illegal, I think you ask questions.
Thank you so much, Alessandro, for your time, for recording. This is the episode. It's gonna be episode 40 something of the podcast, but it's gonna be the first one as Exec DNA. So for people who want to join the community, join the platform, we are building an executive and board intelligence platform across different verticals. So we are gonna tell more during the next few weeks. Join us, subscribe, and Alessandro, we'd like to say a few words to say goodbye. How you can help people want to reach out to you for your.
Please reach out to me on LinkedIn, Alessandro Hatami, if I can be of help. It's been a pleasure, Mario, and discussing this with you. What's really exciting is when you have a long career of things that you've done, living in a world that is changing so rapidly, it's super exciting, scary and exciting at the same time. So it's a roller coaster. So it's quite fun. So I enjoy that.
Thank you so much, Alessandro. Have a great end of the week.
Thank you. Same to you.
Cheers. Bye-bye.